It was a tough year to be a beauty company. And to explain how tough, I want you to imagine having $100 at the beginning of this year. And then you took that $100 and you thought, I want to turn it into more money, so let me go invest in a beauty company. So you walked maybe from your house to the bank, or maybe you got online and went to your banking account and you put that $100 into e.l.f. Beauty. Do you know how much money you would have now? You would have around $64, meaning you would have lost $36 instead of gaining money, because that company has failed to impress its investors this year. And e.l.f. wasn't the only beauty company to struggle. In this episode of The Devil Wears Data, let's go through a few beauty companies that didn't have the best year and dissect why that happened. And we'll discuss what it means for you, whether you're somebody who likes buying beauty products or whether you're just somebody who really enjoys learning about the finance, business, economics of beauty and fashion. If you're new here, hi, welcome to The Devil Wears Data. This is your seat inside Fashion and Beauty's boardroom. You know those giant meeting rooms where company executives sit together and make decisions about your products and the things that you wear? I'm a journalist who's covered Wall Street for many years, and on this channel, I have a really fun time explaining the business of beauty and fashion as someone who's very curious about those things myself. So if you don't want to miss my future videos, please hit subscribe and turn on the post notification bell, and give this video a quick like so other people can find it too. Back in March of 2023, I was sitting hunched over on my desk in Manhattan, going through e.l.f.'s financial details, and I put up this video on the rise of e.l.f. Beauty. I uploaded that video when the stock price of the company was around $69. And since I uploaded that video, the stock price had impressive highs above $200. But now it's sitting in the range of around $70. And I mentioned in the beginning of this video, you would have lost around 36% of your investment had you put money into this company in the beginning of this. Now, I know a lot of people who watch my videos don't come from a business or a finance background, so if you're wondering what a stock price is and why we're even talking about it and what significance it has to e.l.f., let's break that down really quickly. And if you're someone who knows what a stock price is and you don't want to hear this, just forward a minute into this video so you don't have to watch this. Now, there are certain things that a company's stock price can tell us, and there are some things that it can't. So when we talk about e.l.f. stock price, what we're talking about is what investors and traders and analysts, basically these people in suits that work in financial corporations, think about the company's current and future prospect. When a stock price is rising, it indicates that these people have a lot of optimism of the company. And when it's declining, it means pessimism and worry that things aren't going well for the company. So the stock price is what outsiders think about how the company is performing and then determining its perceived value. There are things that a stock price can't tell us. So when we talk about e.l.f. stock price, what it can't tell us is the company's inherent value. A stock can be overpriced, it can be overvalued, it can be undervalued. So just because I say that e.l.f. stock price has struggled this year does not mean I'm saying that this company has collapsed and that it has no future and that it's just over for e.l.f. That's not what the stock price tells us. Companies go through cycles. They have ups and downs. Sometimes they have really long downs and sometimes they have long ups. And the coolest thing about being a business reporter is I get to tell stories about those ups and downs, which can happen in really unpredictable and surprising ways. And then they become business school case studies. If you have gone to business school, that might be something you know. So why did that e.l.f. stock drop and what's going to happen going forward? So even though e.l.f. is growing, investors of the company were expecting more profit. One of the big villains for e.l.f. this year was tariffs, and in e.l.f.'s case, a lot of their products are made internationally in places like China. A tariff is basically a tax on products that are made overseas. And e.l.f. can't really afford to get too expensive because the whole selling point of their brand is that they're affordable. Another issue is they're seeing a lot of competition from other really big players like L'Oreal, which has stepped up their game a lot recently in terms of affordability, more launches, more marketing, more shelf space in stores, and L'Oreal's stock price this year was up 7%. Now, these things impacted e.l.f. significantly enough that their acquisition of Rhode didn't exactly help them out, even though Rhode is performing really well when you look at the financial details. And I have a whole video about that. It was the last video that I uploaded on my channel that you can check out. But Rhode is performing well, and it wasn't well enough to impress investors and to overlook all of these other things that e.l.f. has gone through this year. Somebody named Ivy Rose Gullwacker on my last video said, I saw a huge shift in e.l.f.'s perception online when, one, they made that very weird cringe post about increasing their prices that rubbed a lot of people the wrong way, and two, they worked with Matt Rife, a controversial comedian that most of e.l.f.'s target demo either felt indifferent about or did not like. So those two PR blunders also didn't help e.l.f. this year, which is surprising for a company that has been known for its really innovative and really trendy, on-the-mark marketing over the past 2 decades. Another comment on my last video is from Vanessa2915, who said, "Hi, I love your channel and have been waiting on this update. It would be great if you could do a separate video and e.l.f.'s overall performance future, since there's more to it than just the Rhode acquisition. Maybe you could even frame it as the future of beauty in the upcoming recession, the strain on the consumer. Please, I would love to watch that." So thank you so much for your comment. I read all my comments because I'm just so thankful to even have an audience. That's a great question. The beauty market did cool this year, according to McKinsey's State of Beauty report, which they put out every year. So the beauty market is expected to grow 5% annually through 2030, which is a slower growth rate than it has seen in the past few years. And there are so many reasons why this is happening that it's almost worth creating a separate video about it. But more investments and spending are going toward health and wellness, which is where people are prioritizing their money. People like me and you are becoming more skeptical about the ingredients in our beauty products, and this is impacting a lot of companies. And of course, the rising cost of living. When you have beauty and makeup companies increasing costs, while people are being mindful about how they spend their money, and they're being more budget focused, especially in a market that seems oversaturated with beauty and makeup products just about everywhere you look, what you get is a perfect storm of bad conditions that hurt beauty companies. Now, this isn't to say that the beauty market is collapsing and that this is the end of e.l.f. as we know it. And it would be a little bit sensationalist to say that this is the end of e.l.f. But what I will say is that the beauty market is maturing, and that is forcing executives at beauty companies like e.l.f. and the other ones that we're about to talk about to think about their products in a different way and position them in a different way. But e.l.f. is still relevant. It is still viral. It is still the #1 brand for teens and Gen Z. Investors are retreating because of some of the factors that I mentioned in this video, but this is a large company and falls and rises are not definitive. And the company is making plans to get that stock price to go back up. They have a plan for international expansion and aggressive marketing. So we'll just have to keep watching, and you can always come back here when you want your updates on how e.l.f. is doing. All right, let's talk about the elephant in the room, drunk elephant. Earlier this year, I made a video about Shiseido and how they're really struggling with their drunk elephant brand, where I outlined the company's plan to investors on how to revitalize that brand after it had a really viral Sephora Kids moment last year that kind of turned adults off to using it because they started associating it with 12-year-olds at Sephora who were trying skincare products for the first time. And that obviously had the opposite effect on the company. You know, you would think that something going viral with youth is going to be a great thing, but for Drunk Elephant and for Shiseido, it showed that that wasn't the case. So in that video, I highlighted the ways in which the Shiseido team is trying to help Drunk Elephant kind of come out of that slump. Some of the things that I highlighted was training retail workers on its many benefits, so those retail workers can then tell us about the benefits. It included marketing the brand more aggressively by highlighting its clinically backed ingredients, which we saw on Instagram. They were doing a lot of this year. Shiseido was really optimistic that they could turn things around, but us, public, were just not having it. And with so much out on the market and new products coming out all the time, it seems like people aren't really ready to revisit Drunk Elephant again. Maybe they need a few more years to do that until the Sephora Kids thing is like not so fresh in our memory, but right now the company continues to struggle. Shiseido's sales fell 4% compared to last year, and this was driven by a combination of weak sales in China, travel retail slowdown, which means the airport beauty stands took a hit, and ongoing struggles at Drunk Elephant. Demand did not bounce back in the way that the company had once hoped. Are any of us surprised? Let me know in the comments. Did you think that this company was gonna kind of make a huge comeback, or are you like, yeah, that checks out, I don't think I'll ever be buying Drunk Elephant ever again? Let me know what you think in the comments. Here's what surprised me though. Shiseido is not giving up on Drunk Elephant, and they are not losing hope. They still want to revive the brand. They said that very recently, and you know what? If they do pull that off, that's going to be a really interesting case study. All right, this next news raised some eyebrows. Did you get my pun? Do you know what I'm talking about? That was a little hint. I'm talking about Anastasia Beverly Hills. If you're not familiar with Anastasia Beverly Hills, let me tell you a little bit about that brand before we go into why it's struggling. For those of you who might not know, Anastasia is a multimillionaire businesswoman who started this company mainly with eyebrow pencils, and that's what she's become known for. Very recently, TPG Inc., a private equity firm, exited most of its stake in Anastasia Beverly Hills as part of a debt restructuring. It wiped out around $600 million in investments in the company. What does this mean in non-financial jargon? Like, why should any of us care that they did that? Who cares when private equity does things like that? Private equity really bet big on this company, hoping that the company would win big and then they would get even more money back than the investment that they put in. That's kind of what the whole financial game is about. In this case, Anastasia Beverly Hills was a big L for TPG. Anastasia Beverly Hills took on debt during its growth years, and when sales started to slow down, it struggled to repay back that debt. So in talking about restructuring that debt with its lenders, on this side, the private equity firm TPG lost its stake in the company. This doesn't mean the brand is shutting down or disappearing, but what it does mean is that the company is in a bit of a reset phase, focusing on restabilizing its finances and showing that it can be profitable again. And whether that happens is dependent on how well they can connect with us again. So if you start hearing more about Anastasia Beverly Hills, you notice more sponsored posts from influencers, or maybe you hear the name more often when you walk into a beauty store and the retail employee says, "Hey, have you tried this brand? Have you tried Anastasia Beverly Hills?" That could all be part of the plan to get us to fall in love with this company again. I don't know how feasible that is, because with the beauty market cooling and so many products out on the market, especially that Target eyebrows, I don't know if they can get people to fall in love the same way they did back in 2016 when there was less competition. But Anastasia, the founder of the company, invested $225 million of her own money into the... I'm not sure if it'll have the same popularity it did 10 years ago, but I'd love to know what you think. If you made it this far into the video, I want to give you a pat on the back. And yes, that was the hint for the next one we're talking about. Did you get it? We're talking about Pat McGrath. She's a very successful makeup artist. She's also who played the Queen in Taylor Swift's Bejeweled music video. The company is going through a restructuring and recapitalization process. In simple words, this means the money situation at the company needs fixing so that they can keep operating. This usually happens when growth didn't pan out the way that investors had hoped. And here's the data. Back in 2018, the company was valued at $1 billion. This is when it received an investment after launching in Sephora. But right now, the valuation sits closer to $174 million. And that sounds stark, but let's talk a little bit about what valuation means. Valuation is what a company is perceived to be worth. Again, in finance, we have a lot of calculations that happen from the outside looking in. Nor does it reduce how iconic the company may be. You may still love Pat McGrath Labs. You may go tomorrow to Sephora and buy yourself something from the company. It doesn't indicate how much people love it either. This valuation in this news does not mean you're not going to see it on shelves anymore. I've obviously not covered every single beauty company that struggled this year because that would be a really long list. There are a lot of indie beauty companies that shut down. Unfortunately, it always breaks my heart to see a small business owner go out of business because I know how hard it must be to try and launch something of your own, and without resources, sometimes without the right connections. Like, I read a lot of news about indie beauty companies shutting down. I also left out luxury companies from this video specifically because I just wanted to give highlights and I didn't want this video to get too long. The reason I focused on these companies is because they are quite popular. But if you know of any companies that struggled this year and you want to mention it to others, please leave it in the comments. I would love to read your comment. If you made it this far into the video, leave me in the comments what you're going to have for dinner tonight, because that could be our little secret. For all the people who didn't make it this far into the video, it's going to really confuse them to read that. Thank you so much for watching. I hope the next year is full of miracles for you, and I will see you again real soon.